Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
In today's episode, I want to talk about 5 small business accounting tips that will really help you. The truth is, running a small business is hard work. Every day you're filled with more and more tasks coming at you. A lot of my clients will say, it's like, Ralph, all I do all day is put out fires. And that's true. When you're a small business owner, that's very common. This is going to really help you, especially as your business starts to grow, because you're going to need to focus on these 5 tips to really improve your accounting record keeping. So keep these in mind and use those. I'm telling you, this will help you a lot. The first tip, and this happens all the time when I pick up a new client, keep your business and personal expenses separate. Now, trust me, it is a lot easier to have one bank account. And whenever you do something personally, you spend your money, you use the card. Could be a debit card or a credit card. But then you're putting your business expenses on that. Now, the fancy term for that in accounting is what's called commingling. So you're basically commingling the business use of the funds and the personal use. So one of the things that I tell clients, first of all, and we'll talk about entity structures in another episode down the road, but definitely have a separate business account and personal account. For example, just like, let's say you bought a new iPhone for your daughter. And how am I going to pay for this iPhone? Well, you grab your business card because it was handy. It was right there to use it. But now we've commingled now because we've got a personal expense for your daughter's iPhone that definitely wasn't a business expense. So you can pay it back, your business, for that. But really the best practice is to keep things separate from the beginning. This will save you time in the long run. And I know you don't believe me right now because you're going to say, Ralph, that makes no sense. I've got my business credit card here. I'll just go ahead and put the business stuff on there and I'll put the personal stuff on there and I don't have to worry about it. Well, that sounds great in January and February. But then when July, August, September, October, November come around and you're starting to think about putting your tax return records together, now you've got a mess on your hands because you've got to sort through all of those receipts and all those transactions and figure out what was business and what was personal. I frankly also feel like it's a very good thing to separate in the event that you ever get audited. I can tell you from personal experience with my clients, I'd love to be able to say to an auditor, Mr. or Mrs. Auditor, listen, my client has a personal account and my client has a business account. Any transaction you see on the business account is business. And any transaction you see on the personal account is personal. So it makes things a lot cleaner and it makes you save a lot of time when you go to put your records together because you can say, okay, well, here's my personal, I'll use the word shoebox, and that's kind of scary to me as an accountant. Whenever one of my clients brings in a shoebox, I get kind of scared because that's, oh boy, I've got a lot of work to do. We don't have as many of those these days with so many tax software packages out there, but they still exist. But to keep them separate will really save you a lot of time. The second tip is don't make the mistake of doing your own taxes. And trust me, I see this all the time. Small business owners often try to save money by relying on software packages to do their own taxes. I talked a lot about this in a different episode on IRS notices. But the truth is, in reality, not hiring a professional can cost you big bucks down the road. Why is that? And that's because you might not claim all the deductions you qualify for. I don't know how many times I've had a new client come in because they'll say to me something along the lines of, this just didn't seem right to me. It seems like I'm paying too much tax, or it seems like this doesn't make sense. And it's always great when I can tell them, oh, you're absolutely right. You missed the deduction, or you missed a particular thing that you could have taken. So it's wonderful when I'm able to tell them that. It's not so wonderful when I have to tell them, oh, guess what? You made a big mistake and you understated your income and now you owe the IRS money. So it can work both ways. So my advice to you is if you've got a small business, hire a tax professional, hire a CPA or a Delaware public accountant or something like that to do it. It's just not worth taking the risk with that software. And trust me, I fix these all the time. I say to new clients who come in who have used one of the professional software packages, it's great for me. It builds my business because it talks people into taking deductions or talks people into doing things that just don't make any sense. And in the end, this can lead to costly audits or penalties and other fees that you just don't need and you can avoid. The third tip is to expect the unexpected when it comes to expenses. With a startup or growing business, it can be difficult to predict future expenses. You just don't know what's coming down the road. Sometimes the unexpected happens or equipment breaks down or something needs to be replaced. In any forecast, it is usually best to leave a solid buffer for expenses for the long term. Plan for equipment and software upgrades, maintenance, administrative expenses, and professional service fees and more. This is an area where I find a great deal of problems with new clients. And we'll talk about this in another episode down the road about undercapitalization. You have to have rainy day plans, and that's exactly what I'm talking about here. Expect the unexpected. I had a client a few years back that had a power washing business, and a power washing, rig to go do is not cheap. But the downside to that is, though, if something goes wrong with it, you've scheduled all these jobs and you can't do your work. So you got to have redundancy built in. You have to plan on fixing your equipment. You have to plan on having upgrades, plan on having administrative and maintenance expenses. The next tip, number 4, is don't underestimate employee costs. And trust me when I say this, employees are likely to be one of your biggest expenses. So even a slight oversight or mistake can be costly. Often small business owners forget to consider the cost of payroll taxes, insurance, and healthcare costs. Getting a complete view of your employee costs can help you make better decisions with your hiring down the road. Now, trust me, this happens constantly. Very common in the trade industries. I'll have a client that'll come in and say, Ralph, I just don't understand how my business isn't making any money. And I'll say to them, tell me about your business. And they'll say, well, I'm a plumber. Let's say I'm a plumber. And I say, okay, well, tell me about your plumbing business. What do you do? Well, I go out on the road. I take a person with me. I have what I'll call an apprentice or a helper. And I said, well, what does that apprentice or helper cost you? And they'll say, well, I pay that person $12 an hour. And I said, okay, but what is it really costing you? And they'll look at me like a deer in the headlights. They have no idea what I'm talking about. And what do you mean? What is it really costing me? And that's when I have to say to them, listen, that's great. You're paying that person $12 an hour, but you're also having to match their Social Security and Medicare. You're having to pay for federal and state unemployment insurance. You may be paying for workers' comp insurance. I would hope you're paying for workers' comp insurance in that trade specifically. And you may be offering some other benefits. And if you're not factoring that in at the time that you're doing the service, so in this particular example, I had a plumber, this is several years back, and he was taking a person on the road with him, and his hourly rate, and I don't remember exactly, let's say $39 or $40 an hour was his hourly rate. And he says, Ralph, I just don't understand it. When I look at my jobs, I'm losing money. And I said, of course you are. I said, that's because you're not charging enough because you're charging $40 for your rate, but you've got an apprentice there that is, you're saying it's $12 an hour, but really costing about $15 an hour. So if you're taking an hour on a job and charging a client $40, you're losing money. So that's why it's so important to understand this. I meet with clients about this all the time. A lot of times our small business clients, they're used to doing the jobs themselves. And all of a sudden they think, well, you know what? I should probably hire somebody because if I hire somebody, I can make this business grow. And the first thing I tell them is, okay, that's fantastic. But here's what you need to think of. What is your overhead cost? And they'll look at me. What is overhead cost, Ralph? Well, what I mean by that is if you want to pay Joe $12 an hour, what is it really costing you to pay him $12 an hour? And they'll say to me, well, how do I figure that out? I said, well, it's pretty simple. Here's what we're going to do. So generally, I tell clients to add about 20% to whatever you're paying an employee. But this is the thing you need to remember, because when you're doing estimates or when you're figuring out your billing structure, or if it's something as simple as you're running a small retail shop, you need to know what your costs are. And one of the biggest expenses is that of employee cost. The final tip in my top 5 for small business owners is to don't forget to get paid. And this may seem like the most obvious thing out there, but you'd be surprised at how many small business owners don't properly track invoices and customer payments. It is very common for me to come upon a new client and I'll say to them, okay, well, how do you handle your invoices? Well, when I'm at the job site, I get the customer to write me a check or something like that, and I get the payment then. I said, well, what happens if you don't? Well, then they'll send me a check. I said, well, how do you keep track of that? Well, I guess I don't. It's sort of on the honor system. Well, let me tell you, friends, the honor system is not the way to go. It's imperative that you set up some sort of professional invoicing system. I'm a big proponent of QuickBooks Online, and we'll talk about it in another episode. But this is a very important thing to do. If you're not keeping proper records, it could be months before you realize you have an outstanding invoice. This happened to me personally. I had some work done at my home. I guess it's been about 2 years ago. We had an additional HVAC system put on the second floor of our house. And at the time, we were doing a lot of projects, and we had a contractor come out, and they finished the job. And 2 years later, I get a email that said, hey, Ralph, by the way, we never received payment on this job we did for you back in August of, let's say 2015 or 2014, whatever it was. And I looked at my records and said, you know what? That's absolutely true. I didn't send them a check. But what was scary is it had taken them, and I want to say it was 18 months to 2 years at this point, to figure out that I hadn't paid them. I could have very well been away, moved, and they might not have ever been able to find me. Now, because I'm an honorable person, I sent them a payment, but I thought about it for a while. I said, that's outrageous. How would you let your customers go that far without being paid? So this is really, really important. Make sure you're tracking all payments due and recording when invoices are paid. This is where you have to get into some software. The idea that you're going to keep track of this on a pad of paper and remember what's going on down the road, it's just not going to happen. So you really need to pay attention to this and look and see if there's a way to keep track of these things electronically. Like I said, we'll talk about it in another episode, but QuickBooks Online is definitely one that I would highly recommend for this particular situation. You also want to pay attention to how long it's taking your customers to pay and keep track of that, because you may need to alter your practices. And if you know somebody, as somebody that doesn't want to pay you timely, then you definitely want to take a look at that and say, you know what, before I do a job for this person, I either want to get a substantial amount up front, or I'm going to require them to pay the whole balance at the front end of this. But these are all things that you need to take into consideration when you have your own small business, so that you don't find yourself, having a problem down the road. And like I said, these are just the top 5 things that I think are very important. Clearly, I would definitely recommend that you hire a professional to help you navigate your small business. Look for another episode coming up shortly where we'll talk about the different entity structures that you should be looking at, because there's a ton of tax consequences to that. There are liability consequences. I'm not an attorney. I'm not going to give you legal advice, but there's a ton of legal consequences. There's a ton of tax consequences that are all based on the type of entity structure you have. So it's a very important thing to do.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.